Good morning, good morning. Based on yesterday's palaver, I'm hoping people can hear me. And if you can, Michael, can you hear me?
I can, yes, loud and clear. Good morning,
Yes,
Ryan. Good morning, everyone. Thank
yes.
goodness for
Welcome to
that.
today's morning blast. Let me get the legals out of the way. So, as usual, nothing discussed on this basis session constitutes trading and investment advice or infers any kind of endorsement whatsoever by myself and Mr. Michael Brown. Um, how the devil are you?
I'm all right, mate. I'm all right. I'm actually quite pleased this morning because, for
Oh,
once,
oh,
sanity has prevailed and
okay.
Aberdeen Asset Management have
Yeah.
refound their vows, which is brilliant news.
What I would love to know the cost of paying people to come up with
Oh,
the decision to remove them, and then again they've probably got some consultants in to then tell them to put them back. I would love to know how much they've spunked on that.
yeah. And also all of the other changes. I mean, even down to reprinting tens
Business
of
card.
thousands of business cards and all the
Yeah,
rest. I
right.
mean, it's an absolute less. I mean, that will be taught in business school for years of how
Oh,
not to do
massively.
rebrands.
The thing is, it
Um,
wasn't like I don't know one person that actually went, "Oh, do you know what? I can see what they're doing here." It was like from the moment they announced it, everyone was like, "What have you done?"
yeah, no, absolutely. I mean, it was just quite funny to take the piss out of them, but
Yeah.
absolutely illogical decision to do it. But anyway, they seem to have seen sense by now.
Yes, exactly that. Exactly that. What else? Apart from that, what else has been happening, my dear friend?
Oh fucking hell!
Oh
What has
God,
been happening? It was a
how
Monday
many you got?
yesterday that felt like about a fortnight's worth of news in one go. So let's try and break it all down for you. I mean, first of all, let's just kick off with some of the market moves that we saw. It was a pretty grim day in terms of risk appetite. The S&P 500 having its worst day of the year so far, with the index closing down by about 1.8% yesterday. The Nasdaq 100 losing 2.2%. We also saw gains across the Treasury curve, with the two-year yield falling back below 4%, the 10-year yield falling back under 4.2%. But it is worth noting that those gains across the Treasury curve were not mirrored on this side of the Atlantic, with gilts and bunds selling off in pretty chunky fashion across the curve, obviously, as the market braces for an increase in defence spending from European nations, and actually some Bloomberg headlines just crossing that the EU is proposing 150 billion euros in loans for what they call pan-European defence. So the trajectory of defence spending on this side of the Atlantic is only going in one direction. In terms of catalysts to spark that relatively sour sentiment yesterday, I think there were really two. The first was some soft economic data out of the United States. The ISM manufacturing PMI coming in below expectations at 50.3 in February, down from the 50.9 that we saw in January. When you dig into the details of that release, things are even more grim than that headline would suggest, to be completely honest with you. The index was really propped up by every man and his dog rushing to get imports done before tariffs go into effect. We also saw the prices paid index rise to 62.4, which is its highest level since June of 2022, while both the new orders and employment metrics fell below 50 and into contractionary territory. Of course, this is a week where we have three big US economic releases: the ISM manufacturing, the ISM services PMIs, and of course the jobs report on Friday. The market looking for some solid figures in all of those to dispel some of these growth worries. And well, it's 0 for 1 on that front based on the ISM manufacturing data yesterday. The other factor that was pressuring sentiment through the day yesterday, particularly late on, was an announcement from President Trump. He was actually giving a press conference on the fact that TSMC are planning to invest $100 billion into the United States. However, that then went quickly off-piste and onto the subject of tariffs, where Trump confirmed and has indeed overnight signed into effect a 20% tariff on imports from China and also a 25% tariff on imports from Canada and from Mexico. In terms of the response to that, China's response has been pretty rapid. They have announced a 15% tariff on some US imports, including agricultural products. They've also added 15 US entities to what China call their export control list, and also they're going to file a lawsuit at the World Trade Organization. Not entirely sure what the point of that is. The Canadian response has also been broadly in line with what they previously trailed, a 25% tariff on around 30 billion Canadian dollars worth of imports going into effect from today, with an additional tariff on 125 billion Canadian dollars of imports in 21 days if the US measures remain in place. And of course, the Canadian government also saying that they are in, quote, active discussions with provinces and territories across the country to pursue what they are calling non-tariff measures. The Ontario Premier has said overnight that he might just turn the power off because Ontario shares a power grid with some northern US states. So some pretty punchy rhetoric on that front. I should have mentioned this a moment ago, but what was interesting about trade yesterday was although gold caught a bit of a haven bid, rallying about 1%, the dollar did not find any of that haven demand. As we mentioned on the blast yesterday, the market in no mood to forgive downside data surprises. And as a result of that, the reaction to the soft ISM manufacturing figures yesterday was a pretty brutal one. The dollar index ending the day about 0.75% lower. Cable reclaiming 127 and the euro reclaiming the 105 figure as well. Were you going to say something then?
Yeah. I also think it's worth mentioning the Fed Now number.
Yes, it is. That was way down on my list. So go on, off you go.
No. Just because as we're talking about bad data, I just thought it was. I didn't know if you were going to bring it up or not. But yeah, for anyone not paying attention, the Atlanta Fed Now forecast, or their kind of like live GDP tracker, GDP now. Sorry. It came in at negative 2.8, which is
That's right.
absolutely diabolical if it materializes and ends up coming through in the real data. But yeah, I think that was also something that people were looking at, and obviously, cut those rates if it does materialize.
I think a little bit of a pinch of salt needed. Absolutely,
It's a very volatile figure, but yeah,
it's also been skewed massively because obviously we are still quite early in we're not early in the quarter, but in terms of data we're still relatively early in the quarter, and effectively this massive surge that we've seen in imports, basically front running tariffs, is skewing the GDP calculation. If you think about how GDP is calculated, it's skewing that lower quite considerably. So things aren't looking great, but I don't think the economy is as ropey as that metric would suggest. If it is, then run for the fucking hills.
Well, do you know what? I didn't see one person pick up on that point. So hat well and truly doffed to you, Mr. Brown, on that. Good spot.
Oh, well, thanks very much indeed. Added value on the blast this morning.
Exactly.
In terms of other bits and bobs from yesterday, then there were quite a few for the crude traders out there. OPEC, they have, for whatever reason, decided that they will be going ahead with their April output increase and also plan to proceed with output hikes beyond April as well. There had been quite a lot of chatter that they may kick the can down the road for a fourth time on that. Initially, those headlines were coming via Bloomberg sources. OPEC Plus themselves then confirmed that about half an hour later. Crude trading about 2.1% lower yesterday. WTI testing $68 a barrel to the downside. And things look a bit grim if you're an oil bull, to be completely honest. You've got the US economy, which is stalling, as we just mentioned. China is, China. You've got OPEC turning the taps on again, and then you've got Trump running around shouting "drill, baby, drill" at the top of his voice.
On that, it's when you kind of look at what kind of the world situation, supply and demand situation. The only reason for OPEC to be doing this and be announcing it so aggressively is purely because they want to grab market share, which has obviously been one of their mandates for a long period of time now is to try and increase the market share, because it has been falling off a cliff over recent years, really. But also they did throw in a couple of caveats, such as, we could change this, we could taper, all that's market dependent. But the fact they've come out so aggressively and said, we're hiking up production, it's kind of, it just screams of just trying to buy market share, basically. So very interesting one to watch.
It is indeed. Right, moving on. Still fucking ridiculous amount on my list here. This is insane. We had the latest inflation figures out of the Eurozone yesterday, marginally hotter than expected, actually, on both the headline and the core number. Headline inflation rising by 2.4% on an annual basis in February. Core inflation rising by 2.6%. I'd argue that the figures aren't as bad as they look, though. Both were still down by a tenth of... Sorry?
So thank God for that.
Both of those metrics were still down by a tenth of 1% compared to where they were in Jan, and also the services inflation number came in at 3.7%, which is the lowest level since April of 2024. Certainly nothing in that data that's going to deter the ECB from a 25 basis point cut at their next meeting on Thursday. What else have we got this morning? Oh, another one on the tariff front. I mentioned China were talking about putting tariffs on US agricultural products. Well, the US also want to put tariffs on external agriculture products, and that will come from the 2nd of April. The beginning of April, of course, is pivotal here. We're talking about auto tariffs, ag tariffs, ship tariffs, reciprocal tariffs. April really is the key date on the calendar on that front. Sorry?
I just shouted bingo, don't
Oh,
worry.
I see. All right. Back to the chip making front. A few headlines there. If Tom Talks Cars is on the call this morning, hopefully he's recovering. If he is, firstly, I've got no idea what this means, but Nvidia and Broadcom, of course, who reports earnings later on in the week, they are reportedly running manufacturing tests with Intel advanced processes called 18A. If that means anything to you, then great. That is reportedly via Reuters sources. But on the subject of Intel, it is worth bearing in mind that the CHIPS Act, which was going to grant Intel $8-9 billion over a number of years, they have lost 40% of their staff as Donald Trump and Elon Musk go around slashing the federal budget and federal expenditure. And lastly, on the AI front, Anthropic, mentioned them last week. They are the makers of Claude. They have closed a funding round at a valuation of $62 billion, which is pretty punchy indeed. Couple of other things. From me, first is that the EU, they are going to, well, it sounds like a lot of hot air to be honest with you, but they are going to grant car makers some leeway in reaching their 2025 CO2 targets. Originally, this was that car makers had an annual CO2 target that they had to hit. The time horizon for that has now been stretched out to a 3-year window. Again, we mentioned about the bank capital stuff in the EU yesterday. I don't want to get ahead of myself, but I do just wonder whether the EU is starting to wise up a little bit and go, it's fine having this holier than thou attitude, but we're just fucking over our industry at the same time. So it'd be interesting to see whether we get more in that sort of direction of travel. And last, but by no means least, we did hear from the Fed's Musalem yesterday. He was talking about how the growth outlook looks good, long-term inflation expectations are broadly anchored, and that policy remains modestly restrictive. He continues to favour a patient approach, and he is, of course, a 2025 voter, so it is just worth bearing that context in mind. And that, for now, is all from me.
Perfect. Thank you very much, my dear friends. Quickly, as usual, big shout out to Cam, who's obviously listening for our crypto news, who's back very well, recovering swiftly. We hope Tom Talks Cars is doing the same, because it sounds like they had basically the same flu bug going around, which wasn't nice. And also shout out to Zach.
What on earth have they been up to?
Well, I didn't want to ask. Also, shout out to Zach for the overnight news roundup, and that's what I'll read a few headlines from now. So, just on the geopolitical side, we'll skip all the tariffs and stuff because Michael has already covered that. Ukraine aid on hold. The US will pause all military aid to Kiev until President Trump sees good faith effort by Ukraine towards peace talks with Russia. VP Vance says it's important for Zelensky and Putin to negotiate. Kremlin calls location for the next US-Russia talks premature. On the back of this, and the absolute toys out the pram that we saw in the White House the other day, Taiwan is apparently rethinking its US ties after Trump's heated meeting with Zelensky. Taiwan defense officials say Taipei is reevaluating its approach to the US.
Sorry, does anyone in Taiwan want to tell the head of their biggest company who's just thrown 100 yards at Trump?
Well, funny you should say that. Taiwan's government are downplaying the concerns that TSMC's additional 100 billion to US government, US investment, and they're downplaying the Americanization of the chip giants. But we'll see how that plays out. Japan's northeast grapples with its largest wildfire in decades. What else we got here? The US has not discussed Forex policy with Japanese PM Ishiba, who denies a weak yen strategy. Well, we kind of know that's bollocks, but okay. China domestic focus, the NPC policy meeting, which I believe, if my memory serves me right, Michael mentioned yesterday. Officials warn of numerous difficulties, citing weak domestic demand and production struggles. The government highlights AI progress, with DeepSeek also underscoring the importance of risk management in the sector. Aviation fuel concerns. Airbus warns Australia is overly reliant on Chinese aviation fuel, urging a return to domestic production capacity. What else we got? The South African budget. Cabinet finalised the annual budget proposals with the finance minister, which he will present on the 12th. I am not going to even attempt to pronounce his name. Moving on swiftly. Corporate market updates. Automakers and tariffs. Detroit automakers obviously opposing tariffs on on Canadian and Mexican imports, saying these measures will ultimately hurt the US factory jobs. Walgreens Boots Alliance, rather, close to a $10 billion take private deal with Sycamore Partners, aiming to delist the struggling drugstore chain. Foxconn, despite fresh US tariffs on Mexico, it will continue its mega AI server plant in Guadalajara within a year. Aramco cut the world's biggest dividend to ease pressure on its finances. That's obviously going to impact Saudi Arabia's budget. What else we got? Oh, that might be it. Yeah, that's it from me. Back to you in the studio.
Oh, blimey. No, this bloody Zach, he comes back from holiday and then does
you know
half a job.
I'll tell you what it is. It's because he pings it to me about 15 minutes early, so I've got time to read through it. But when he pings it to me, it's the quote prelim version, so he will already have sent out a bigger, deeper one, which is why I suppose you've got to subscribe to the overnight news roundup. There you go. Shameless plug.
Well, there you go. It's a little teaser. Right, in terms of today, then, what do we have? Oh God! Oh, for fuck's sake!
I've been doing so well recently.
Oh God! Can we just
moving on.
brush over that?
What's going on today?
Yeah, today, what's going on? Well, it is, of course, tariff day. I guess that's the biggest focus for market participants at the moment, although those 25% tariffs have now gone into effect on imports from Canada and Mexico into the United States. I think the key questions now will be, firstly, is there any further retaliation? Because we haven't actually heard anything specific from the Mexicans just yet as to what they will do in response to these levies being imposed. The second will be whether there are any moves or any sort of concessions from either Canada and Mexico to try and get these tariffs taken off again, or whether we just see a continual ramping up of the rhetoric. Of course, Treasury Secretary Scott Bessent on Friday was talking about how the US want Canada and Mexico to match the US tariffs on China. As we were speaking about, it's going to be a lot easier for Mexico to do that politically than it is Canada. And by extension, I think the third thing on market participants' minds is how long are these tariffs going to remain in place? If you have a 25% tariff for 2 or 3 days and then it gets taken out again, the macro impact is effectively nil. If you have a 25% tariff on Canadian goods for the next 9 months, then that's a very, very, very different story. And I think that is something that participants will slowly but surely begin to turn their focus to over not just the session today, but also over the coming sort of days and weeks.
Just
Go
a
on.
quick little kind of tidbit or whatever you want to call it on the Mexico side of things. It's worth mentioning that they've been very proactive trying to work with the Trump administration. They've actually had a team of Mexicans, obviously, in and around the White House for the past, I want to say 3 weeks, trying to really work with the trade teams over there and really trying to iron out some stuff. And Scheinbaum, the Mexican leader, has been really, really proactive trying to work with the US. So yeah, I'm not going to try and guess what's going to happen because I think that's absolute fool's errand. But it's one of those. I wouldn't be surprised if Mexico come off a lot lighter than Canada. So
Yes, I think I would agree with that. The key sort of event to watch on the political front today will, of course, be Trump's address to a joint session of Congress. It is not a State of the Union address. For the number of bloody people saying it is not. Because it is the first address of the presidency. It is never a State of the Union address. It is an address to a joint session of Congress. Forgive me, that's pedantic, but it's important and it matters.
Calm down there.
That will take place overnight here in London. He's due to be speaking at around about 9 o'clock in the evening on the east coast of the States. It's about 2-ish a.m. here. I'll certainly be tucked up safe and sound in bed. But nonetheless, that will be an opportunity for Trump to, he will undoubtedly talk about tariffs, but he'll also probably touch on other areas of his economic agenda as well, particularly in terms of tax, in terms of Doge, and in terms of government spending plans. So I think that's going to be one worth watching. In terms of sort of other scheduled events on the docket today, the data calendar is very, very light indeed. Actually, we only have the latest Eurozone unemployment figures due this morning at 10. Joblessness set to have held steady at 6.3% in the month of January in the Euro area. Central bank speakers also relatively light, mercifully. We're just due to hear from the Fed's Williams and the RBA's Hauser as we move into the evening. And the earnings docket also relatively light as well. The most notable release today coming from Target before the market open. Those earnings are going to be actually quite interesting given the somewhat soft commentary that we had from Walmart on the consumer and the potential impact of tariffs when they reported a fortnight ago. I think there will be some extra attention on Target when they report in a few hours' time. And that is pretty much it from me for now.
Beautiful. Well, thank you for that, Mr. Michael Brown. There was obviously a shit ton to cover, so I'm quite impressed we've done it in 22
20 minutes. Incredibly efficient.
Incredibly, especially with me butting in all the time. But thank you very much, listeners. Thank you as always for tuning in. Obviously, tune in tomorrow because it's probably going to be a shit ton new tariff headlines, to be honest. And good luck to them. So if you are trading today, keep it tight. Don't do anything we wouldn't do, and we'll see you tomorrow. Goodbye.
Bye-bye.